make it available for everyone to go over. Okay, so boom, I just quoted it. So as I was saying, I was looking at now we're looking at the euro dollar. Now this is on the daily. Because there's some nice sideways movement around this area. Boom, nice consolidation, and we had this nice drop over here, and we saw a bit of a sideways range. Okay, so like false breakout to the downside, and then the market pulled back in. But we're still moving within the range that created the low for May. Okay, and that high for like June. Yeah, I think low May and then June high. That market is still holding, right? That range is still holding. So we're not seeing any breakout to either side. Right now, this usually is indicative of a potential upside push. Okay, but I'm not yet convinced of the buy on the euro dollar. We'd have to start breaking levels above $20 or $19 rather for me to consider this a buy. So I'm still short bias. And looking at your H4, there's some nice levels, some decent levels that we can look. Let me just do this. There's some nice levels that we can look to get into the market, right? As a guy doesn't know, I usually look for those nice pullbacks, Fibonacci tracement, right? And those nice big figures, right? So I think $1.17 would be a nice option to see previous resistance structure. We zoom out, right? Market had played around between this area over here, and if we throw it on the H1, okay, see the market bounced off, created sort of like a sideways range, which does tell us that there was a bit of shorting from institutional players around this area. Okay, created this sort of like fake. Give me a moment, guys. Okay, you see the market bounced off, boom, 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 broke above here. Okay, and obviously this was a classic support or resistance becomes support type of scenario. People were expecting the market to push up, and there was a heck of a lot of selling at this point. So I do believe that once the market comes back to around $17, we should see a bit of a pullback to the downside again. Now, currently, I mean, I don't see any major significant levels on the Euro USD that we can look for. But for me, I would expect the market to drop down to at least $13, right? Continuation move down to $13. Only difficulty is actually getting into this type of market because the pullback doesn't look like we're going to get much of a significant pullback. Okay. Guys know my levels, anywhere between that 50-62% Fibonacci retracement level. Right, you can see a bit of a drop, and then the market moved sideways. Right, a lot of buy orders and sell orders accumulated around this area. Market pushed back down again, so the market might spike back up there, but definitely no reason for me to be shorting at this market. So I'd probably let this one iron itself out for the rest of the week. Okay, but anticipation would definitely be a touch down to $13, hopefully. And if we do get that, I'd love to see it first bump up to $17 and then the market push back down to $13. And whatever happens next, obviously, really isn't a bit of a concern to me. So we're still in sideways consolidation on the euro dollar. This market is not ranging. You see, it's just in sideways consolidation. So the amount of pips that you can get are very minimal from this move. Okay. Okay. All right. Let me mute everyone else. All right, let's go on through to the GU. Okay, the pound. Now let's remove this. Boom. Okay, now the pound dollar. Guys, remember I was long like last year, the whole of last year on the pound dollar. And I thought it was going to be some very upward, a nice upward movement. I did get out probably a bit too early on the move. But looking at it now in hindsight, obviously that was the best thing to do at that point in time. Now, looking at a longer term view, we can see that the market is still in a downward spiral. Okay, EMAs are safely above market price. Market just tapped here, touch big figure 133, 133 even. Boom, one touch, market moved away, came back in again, 32.50, tagged it, and the market pushed back down. What's interesting is um, the gap I was talking about in the group earlier. Um, I did say I don't trade gaps. I don't say like just because there's a movement in the market going down during the weekend, now it's bound to go up. Only when it's there's confluence, right? So the number of factors actually influence that decision, including the gap itself. Then the trade becomes valid or it becomes higher probability. But if you're just looking at the gap and saying, right, I'll trade against the gap, really not going to help you. You're going to get burnt more times than you're actually going to make money. Now, the pound has been also stuck in the range from September, right? So the September range, there's the high 3,300 and the low is 2,800. Say about 2,800, and the market is still within the range. No breakouts either to the upside or the downside. However, I am seeing a bit of momentum to the upside. I'd love, and the pullbacks have been quite significant. Okay, you can take this one for example, that swing low through to the swing high. The market pulled back, right? Did a bit of a tap, okay, false signal type moves, extension down, tagged 29.50, and the market continued to the upside. Okay, so it looks like it's pushing up to the upside, and if we take inventory of our support and resistance levels on the daily time frame, I definitely say 3,300. Boom, and that's our resistance, and our support structure immediate one 29.20 rather, and the longer term one would have to be around 26.62. Okay, so as I'm still bearish on the pound dollar, I'm still bearish. Nothing has convinced me that the market is going up. If we start having breaks above 32.30, right, market starts moving up, closing above those highs, then only will I change my bias. But the market is still comfortably below moving averages, so I'm looking at short opportunities. So I'll be eyeing some pullbacks back into some nice ranges. Okay, ranges preferably with those big figures. One would be 3,200. Right, to take the swing high there. Boom. The swing low, that gap. Love to see the market probably peak at around 3,200 at most, right? Get into this nice sideways consolidation here, boom. And previous market structure as well, the market spiked above here and came back in, broke it, tagged, activated those buy stops above 3,250, and then the market would pull back in. So it pretty much looks like a toss up between the longs as well as the shorts. But since the bias is long term or mid term rather to the downside, I'd definitely be looking at 3,200. So it's more or less in line with what I'd be expecting from the euro dollar as well. Right. So bit of a rally, okay, but predominantly for the next few weeks, we should be expecting the market to move down. If you guys remember this one, this is the euro yen. Okay. I think we missed out on this opportunity. We expected that, I think this was 2 weeks ago, market to tag our 3,250 level. I just missed it by a few pips. I didn't get a fill on the sell stop that I had. I think it was about 5 pips before 3,250. Okay, and the extension that we have is around this level. Right, so this was the first level, 2,900, 29 even, and the second level will be around 28.32. You can see predominantly we are looking a market that's in downward movement. Let me just get rid of everything. Okay. We are in a bit of a bearish state. The market broke below that 200 EMA, boom, and just tagged the 800 EMA. So we should see a bit of a sort of like knee-jerk reaction, pull back up before the market continues the move to the downside. If you did see this play last week, okay, if you did see this play, this was a very nice trade setup. Hit at the first 32.50 level, the market came back in, tagged that 200 EMA on the 4-hour time frame. Definitely a decent trade setup. Now, level that I'd like to see the market pull back up into, take that swing high. This is the immediate swing high that I see, down to that swing low. So short-term trades, 130. I'd probably like to see the market come up to 130 and then continue the move to the downside. And you can look, okay, boom, moving average would probably be around this area here. So I wouldn't play the move to the upside. Right? Definitely wouldn't, if it wouldn't, like from my side. But you can if you want to, but I'd like to see the market react quite nicely. Give me a nice candlestick type formation that would confirm the trade setup itself, and then slowly decline. I mean, here would be an immediate support structure, 27.85. That would be a nice place to take out the profits if the trade setup works. And the second level would close to be around here, around about the same level, 27.71. So it's a potential play of like 220 pips at most. Obviously, we won't be looking to take one order and just try to bank that 220. But if it does work out, then you definitely can take off some profits along the way. Okay. Australian dollar, US dollar. Haven't traded that in a while. This was last week, I think. We're anticipating a bump up to 7,200. Guys, remember, the market just came nearly tagged that zone over there and just, boom, to the downside. It dropped hectically. I didn't think it was going to drop that much. I was expecting like a 100 pip drop from there. Also didn't get the fill on that one because I had myself stop about 5 pips below this low because this had already happened when we were doing that analysis. But looking at the daily, clear downward trend. Right? Not looking for buys at this stage, right? Unless you want to get burnt. And here's simple type of structure. Looking at that swing high through to the swing low, the market 50, 62%, 71.50 is a zone that I see. We look at the 4-hour. Okay. Looking at the 4-hour, we might see a spike just above 71.50 through this low. But you can see that the market dropped aggressively, pulled back in. Right. Clearly, there was some institutional players around this area, right? So there was some profit taking, potentially from the shorts, buying up again, and then the market was pushed back down, and therefore we should expect, okay, the market is going to play along, should expect some downside momentum around this area here. Okay, so this one is more of a watch and wait type of scenario because it's very close to the 71.50. I would usually put it around here, you guys know me. Just 5 pips before. So probably this one might have gotten activated probably around here, like 10 pips or so. But I probably would have canceled it because there's not much else in the move except just a big figure, right? So I wouldn't take the play. I'd rather wait for this to play out, consolidate perhaps for the next 2 or 3 days. Let that EMA move into the strike range, get a nice spike, tag the bottom of this support structure, that previous support structure, get into that liquidity, and boom, we should see some nice downward movement on that. Okay, and guys, remember, I was optimistic with my targets on the Australian dollar, US dollar, and I said 68.28. I think I said that around June with this sideways consolidation. We haven't reached that yet, right? Still far way away from it. Or not saying I'm right or anything, but it seems like it's playing out so far to what I was hoping for. Yeah. Now the GBP CAD. Okay, let's see. GBP CAD has been a bit of a headache. Right, we had this 1, 2, 3 type movement. Let me remove this. I'm using a different MP4, so it has these eyes here. So excuse those guys. Right, so predominantly we've been in bearish mode. The market bounced off this low, came back up. Right, you can see tag 71.50. Boom, moved down, came back, just tagged 66 even. Market moved back up again, and we got like 72.50. Okay, that's why I place a lot of emphasis on those big figures. Those are big player levels. I think we had a bias that said we were gonna, I think before this gap, yeah, I think it was before the gap. See, right, before the gap, we were expecting the market to bump up. Okay, bump up to around 71.7 even. Okay, yeah, 1.7 even around this area here. The previous nice spike there at the 200 EMA, and we're expecting the market to pull back up quite nicely. And obviously the market just gapped down and then boom, hit that zone, right? Hit that level we're expecting to hit as our take profit target, and then just pull back quite nicely. All right, so it looks like there's gonna be some opportunity on the GBP CAD. Right, as you guys know, on the pound I'm still short bias long term. Right, opportunities for the buy though will present themselves, I do believe, this week. I won't be taking them personally. I'll just sort of like wait for the clear short setup. Now, if we remove this, boom, you can see this was hectic. Okay, this is parabolic, guys. This is like 700 pips in 2 weeks. This is actually a massive move. But I guess this should have given us a hint that the market was going to do something like this. Right, you see, just tag, boom, just probably 2 or 3 pips. Tag activate the sell stops just beneath there, and then activate the buy stops just above 72.50. Boom, and then do the same thing here at 70.50. And now the market is consolidating between last week's high and low. Okay, so if we take that fib, that swing low through to swing high, and move on through to our H1 time frame, right, our lower time frame, we can see that we have a nice potential setup right now. Okay, so this technically is a trade setup. I would have taken this one had I seen it, definitely. Just 5 pips above 70.50. Okay. Right, so just above 70.50, probably like 5 pips or so. Right, I'd be expecting the market to probably give me a nice rally to the upside. Now, immediate targets for this, right? Not looking at long-term targets on this one because I still do believe the pound will drop 72.50, right? Previous high, right, last week's high, which has a potential to bank out about, say, 150 pips. Okay, so we'll see how this one plays out. Okay, because I don't like getting in when the market has already moved. because for me, the actual entry would have probably been extended, drawdown of about 15 pips. Right now, probably at about 30 or so pips in profit. Initially, if the trade was actually placed, because if you're looking at this, you got everything that you need from a trade setup, right? You got your fib, you got your moving average, and you got in line with the temporary trend. And you can see from there, boom, probably got 100 pips off the move already. Like, I don't like taking the retake here because it doesn't really offer that bang, But for me, I'd be looking for something along the lines of the USD CAD pads. So on the dollar CAD, if we're looking at the dollar CAD, it should present something similar to the GBP CAD. Okay, also played us, I think the previous week, gave us a false signal that it was gonna rise up first and then drop down to these levels, which is at 28 even. However, looking at our daily time frame, boom, let me just clear everything. Okay, we are still in bearish market, right? So bearish market looks to be moving downwards. Okay, not too exciting because we are still within last month's high, okay, and last month low. Boom, right. So there's no clear directional bias here. You see, this is August open. I'll probably explain that within the next week because some of the guys missed that session about why the open of the month is actually quite important. So if you're looking at H4, 4-hour time frame, the market has been quite choppy. See some very radical swings, market swing up and then down, but it's always consistent with the big figure. The market will always play around those big figures, profit taking areas for the smart money. And right now, see the EMAs are basically right where the actual market is, right? So there's no clear directional bias, which does tell us that we could be entering into a sideways consolidation phase, right? The market could be just moving sideways for some time, probably a day or 2 or 3. However, for short-term trades rather, I would hope that we get this type of move. Right? I would have definitely taken this one. Probably would have almost gotten stopped out, but you see the swing low, swing high, boom, market pulled back in. You had your 200 EMA, 800 EMA as well, and we had your big figure at 20 minutes. And I rearrange this empty for so damn much. Okay, around $30, right? So around $30, probably would have had my buy stop around that area. Probably would have been a bit of heat, probably like 45 pips worth of drawdown. It would have been in drawdown if the intro was too early. But for me, I think it's still a decent trade setup. Okay. So we should see some incline or some push to the upside on the euro and the USD CAD. But I'd love to see the market come to at least $30. Okay, or at least 32.25. Those two levels are going to be very important for us in actually profit taking. Okay. I do like the pullback though. You can see even on the 4-hour time frame, it looks better on the 4-hour time frame. We had that nice tag of boom right there, and we should see some push to the upside. So, I mean, basically from what I see for this week, we should see a much stronger US dollar. Okay. I haven't really taken a close look at the dollar index, but from last time I checked, which was, I think was last week Thursday, we did have some we did have some momentum on the upside. But now going over through to that GBP JPY. The GBP JPY has been really tricky, right? Not that it's been moving a lot, just a choppy sideways movement, right? So this is 1, 2, 3, 4 weeks of sideways movement. Now, if you're not really patient, I mean, you've just been stopped out and then break even, and then the market stops you out again, especially if you're a long-term trader. Now, immediately looking at this, you have that crossover 200, 800 EMA, which was immediately followed by a pullback, boom, which does seem to be coming in to clear out those stops on the downside. Right. Now, looking at this, we still do look like we could be heading downwards on the GBP JPY, okay? But the market is above the 200 EMA and below the 800 EMA. So if we just refer to our weekly on this one, so it's sort of like having conflicting signals. We can see on the weekly that we're still below, right? So long term, still short on the pound yen, long term, but short term, I do see a push to the upside, especially with this type of trade setup. Okay, now bear in mind that we're talking about trades that will probably last a few hours, not something that's going to last a few weeks or a few days, probably a few hours at most. And now if you, let me know if I did something wrong here. I'm not getting my big figures. Okay. Throw those in. Okay, so on the H4, we're going to touch on that 47 even. Okay, market missed 46.50. Okay, usually when the market comes in and misses that 46.50 or that 46 even level, they're trying to avoid it. That would mean that there is a very high probability that there are take profit levels, but from institutional players at that level, and the market would most likely push to the upside. Okay, example, just perhaps this one. Okay, the market would come in, boom, activate, take out stops, just miss that take profit zone for smart money, for probably institutional players, and then pull back in, boom, then hit that zone, and then again, once these guys are taken out to the move, the market will push back up. And you can see again, market just missed that level and then pull back down. So that first miss is always important, but it does give us a heads up that the market could potentially be running away from that zone. Market closed multiple times below the 200 moving average and closed below 47.50, which is reason enough for a lot of people to be looking for the short. Now, as I said, we're still in sideways consolidation. Right? Nothing much has happened. This does seem to me like a false breakout to the downside. Okay, it does seem to me like it's a false breakout to the downside. However, I wouldn't be taking any trades on this one because nothing else is there besides moving average, the theory of the false breakout, and this actual gap. But I'd need market to move away. Okay, move higher. Right, probably tag 47.50. The market does tag 47.50. Probably throw in that EMA or that Fibonacci. Get that 50, 60%, which would be 47 even if we get a tag back down to 47 even. Okay, let me just change that to a black. Okay, if we get that tag back down to 47 even, right, you might see the market push that up into that range again. Okay, so that would be the theory that I would have for the GBP JPY. USD JPY, guys know I've been long on the USD JPY. I think till about last week. Only changed my bias last week after this huge drop because I was anticipating at least a tag of this zone here, right? 1171. Right. I was expecting the market to at least reach that 1171 level because there's a few other levels that do look like there are significant zones around here. Okay. So, however, for me, I'm still long on the USD JPY long term. Right. Long term, I'm still long, but I do see some nice push to the downside. Now, for me, let me just get rid of this first. Grab that big figure. No, I can't live without that. Okay, you can use that 200 EM or that 4-hour time frame. You see that 11 even looks like a really decent zone for the market to come in. The retracement is a bit deep, but probably around to 72%. Okay, not really enthusiastic about that. So I'd probably let this one slide. On the downside though, I can definitely play the downside move. Let me just get rid of this. Short-term downside move, which would then have to be like exited at around this zone. Okay. Because time flies. We have like 5 minutes left. Okay, so if we take this swing high, boom, swing low, see $12, yeah, $12.50. You have that 200 EMA, 800 EMA, might see a nice spike up. Right, which does seem like a few pips. Yeah, like 60 pips or so. Okay, and then short-term trade to here. Okay, because I'm still long on the dollar. Like 146 pips at most. Okay, if you're lucky on that one. 140 pips, not bad. If the market does play out to this theory that I have over here, then we should see some pips before the market actually reverses. Okay, but for me, I'm still long-term buy on the USD JPY, and I'd definitely be looking at a tag at that big figure around 1100 and a tag of that 800 EMA. Okay. All right, guys. Everyone good? Are we okay? Are we sure we're okay? Okay. All right, then tomorrow's session will start normal time, 8:30 p.m. Okay, won't be doing analysis. So you guys know it's just normal trading session. So I think tomorrow, because I had prepared something else, I had some slides that I wanted to go over. I'm not quite sure. I might make it a double session because I've got some stuff that I want to share tomorrow's session, which then you guys can just take over and just do. Okay, guys.